We've reached the last week of this year, and to add to the year in excitement is Money9's weekend special of Companynama. Hello and welcome, I'm Shrestha Tiwari, taking off with the corporate updates first. Telecom operator Bharti Airtel has plans to invest 27,000 to 28,000 crore rupees in telecom network with a focus on 5G rollout. While the company is planning to increase capital expenditure by 10 to 15%, it has no plans to charge a premium rate for 5G services, as it has not worked in several countries that it has tried to do so. Airtel is also planning to list Payments Bank, which is already turned profitable. What's to be noted is that currently only 12% of the devices support 5G in India, with use cases still being developed and trialed. And going forward, Bharti Airtel is also considering raising tariffs across India by February. Asia's richest man, Gautam Adani, in a recent interview to a media house, said that profit has been growing at twice the rate of its debt in the last 9 years, with predictable and assured cash flows, because of which he said that Adani Group's debt to EBITDA ratio has come down from 7.6 to 3.2. He added that no other Indian conglomerate other than Adani Group has as many companies rated equivalent to India's sovereign rating. Moreover, he said that the exposure of Indian banks to the group's debt has shrunk from 86% to 32% in the last 9 years. Reliance Retail, which recently agreed to buy Metro AG's India business for 2,850 crore rupees, is expected to convert the stores into B2B stores, which cater to bulk buyers and Kirana stores. These stores are expected to be rechristened as Reliance Market. They will also be used as fulfillment centers for Reliance's consumer-facing business, such as JioMart. Now, with the acquisition of Metro Cash and Carry, Reliance Market would add 31 stores to its network in 21 cities across the country. It would also boost its reach to over 30 lakh B2B customers, of which 10 lakh are frequently buying customers. And Air India and Vistara will need approvals from a number of countries in order to complete the merger conditions. Legal teams from both airlines are currently assessing which regions to approach for approval, with Europe and Singapore on their list. On 29th of November, Singapore Airlines and Tata Group announced a merger between Air India and Vistara, with Singapore Airlines holding 25.1% of the merged entity. The merger is expected to be completed by March 2024. Only last month, the Tata Group and Singapore Airlines cumulatively infused 650 crore rupees into Vistara as equity investment to meet its working capital requirements. And since we're talking about Tata, according to the Economic Times, Tata Digital will become the sole entity for all online shopping ventures of the Tata Group, such as Big Basket, Tata Neo and Chroma. Advent, which is a global private equity investor, is planning to acquire a stake of 50.1% of Suven Pharmaceuticals from the Justy family. Now, the deal size has not been disclosed, but the private equity major has said that this will be followed with an open offer to acquire 26% more in Suven. Post this acquisition, Advent is planning to merge its portfolio company Cohance Life Sciences with Suven to build an end-to-end API player for the pharmaceutical market. Aditya Birla Fashion and Retail Limited has emerged as the front runner to acquire a majority stake in TCNS Clothing Limited, the owner of the popular women's wear brands W and Aurelia. Earlier, suitors including Reliance Retail, Nykaa, ABFRL and Trent, besides private equity investors TPG Capital, had also shown interest in picking up a controlling stake in the firm. The deal will be a mix of stock and cash and is likely to be signed and announced soon. Over to the segment that focuses on major controversies around corporates. Let's find out which were those companies that were involved in any form of disputes, or as we say, on the radar this week. The NCLAT has set aside an order passed by Fair Trade Regulator Competition Commission of India on DLF and directed it to examine the matter. The case pertains to CCI rejecting a complaint against DLF and its subsidiary for alleged abuse of the dominant position on the basis of a second or a supplementary report from the Director General. Also, on December 23rd, DLF was served a notice by the Noida Authority to pay 235 crore rupees as compensation to the previous owner of the land on which the Mall of India has been built. The amount has to be remitted in 15 days. DLF shares witnessed volatile trade on December 27th. Google has received demand notice from the Competition Commission of India to pay the penalties imposed on it by the former. The notices have been after Google moved the NCLAT seeking a stay on an order of CCI which had imposed a penalty of 1,337.76 crore rupees on the US tech giant for business malpractices and using its dominant market position in certain markets. Besides Google, smartphone makers Carbon Mobiles and Micromax have filed separate petitions in response to certain directions in the CCI order that the companies claim that may harm users indirectly through third-party software or apps that may not be as safe as Android. A special CBI court here on Thursday sent former ICICI Bank CEO and MD Chanda Kochar, her husband Deepak Kochar and Videocon Group founder Venugopal Dhoot to judicial custody till January 10th in connection with a loan fraud case. The Kochars were arrested by the Central Bureau of Investigation, the CBI, last Friday. Dhoot was arrested on Monday and the three were produced before the special judge S.H. Gwalani at the end of their earlier remand on Thursday. The CBI, represented by Special Public Prosecutor A. Limousin, did not seek their custody further. The court then sent all the three accused to judicial custody till January 10, 2023. Shareholders of SpiceJet on 26 December approved the reappointment of Ajay Singh as the director of the No Frills airline, post which shares of airline jumped nearly 7% to close at 37.85 rupees a piece on BSE. In a regulatory filing, the carrier has said that the reappointment of Singh as a director liable to retire by rotation was cleared by the shareholders with a requisite majority. At the annual general meeting, the shareholders also gave their nod for the adoption of audited financial statements for their financial year ending March 31st, 2022. That was all the hustle from the corporate world this week. Now over to what took place in the startup world. Since the beginning of the year, about 50 startups have laid off a large number of employees, citing funding constraints and restructuring, while others have shifted the blame to employees' performance, calling the layoffs as standard. While funding is drying up, a number of companies, including the most well-funded, have laid off large number of employees. As per data compiled by media reports, startups in India have laid off close to 20,000 employees this year. According to a report by the Economic Times, payment service provider PayU has fired 150 staff and employees, that is 6% of the company's workforce, to realign its team locally. Layoffs are spread across teams and mainly impact PayU's India's unit and Wimbo, a California-based payment and security company. Remember, PayU is not alone in downsizing its staff in 2022. Since the beginning of the year, about 50 startups have sacked a large number of employees, citing funding constraints and restructuring, while others have shifted the blame to employees' performance as usual. Online credit platform Money9 has raised $75 million in its ongoing Series E funding led by Apis Partners, a UK-based asset manager. The round also saw participation from Tiger Global, Winter Capital and Evolvence. According to Money9, it is now valued at $900 million. The Bangalore-based company was valued at $625 million during the Tiger Global-led Series D round in March this year, while it was reportedly in talks to raise around $150 million at a unicorn valuation. For Indian startups, the year 2022 will be a big learning takeaway, having them reevaluate their strategy and revisit the basics of business. Indian startups witnessed a decline of 38.4% in total funding in 2022 as compared to the previous year 2021, while the number of investment rounds has also shrunk by 32%. Venture capital funding for startups fell 30% this year compared to the record highs of 2021 as the turbulence in the technology sector made investors skittish, severely hitting late-stage fundraising. The fall in funding this year is largely attributed to sluggish late-stage deals, that is Series D and above, which more than halved to $11.70 billion from $24.91 billion in 2021. And with that, we come to an end to this week's and in fact this year's last episode of Companynama. See you in 2023 with many more interesting corporate and startup updates. Until then, go ahead and download the Money9 app on your Android and Apple phones for New Year special episodes of Money9's other shows. And a very happy and prosperous New Year to all the Money9 viewers. And just like you did in 2022, keep watching Money9.